This video explores the challenge Malaysia SME face in secure financing and the impact of their performance, growth and sustainability. We will compare various funding sources highlighting their benefit and limitation, offering a valuable insight for SME owners, entrepreneurs and anyone interested in the financial landscape. Firstly, let's define what is constitute an SME in Malaysia. In Malaysia, the definition of a small and medium-sized enterprise (SME) is based on the classification provided by the SME Corporation Malaysia and the Ministry of International Trade and Industry (MITI). The classification is based on two key factors: annual sales turnover and the number of full-time employees. Let's break it down. Categories of SME. The first one is micro enterprise. Sales turnover less than 300,000 per year. Number of employees less than 5. And the second one is a small enterprise. For manufacturing, sales turnover between 300,000 and 50 billion. For service, sales turnover between 300,000 and 3 billion. For employees must be between 5 and 50 in manufacturing and between 5 and 30 for employee in service. The last one is a medium enterprise. For manufacturing, sales turnover between 15 million and 50 million. For service, sales turnover between 3 million and 20 million. And for employees between 51 and 150 in manufacturing and between 31 and 100 in service. Next, for SME business registration, we need to open the SME Corporation Malaysia website. We need to register your business name with SSM. Make sure it complies with the guideline and need to fill the form and provide business information. After that, we need to make the payment for the registration and lastly, wait for confirmation from SME Corporation. Understanding this category is important because this threshold also help to determine which government program, financing option and support structure SME can access. Every activity, whether in business or other matter, has its positive and negative impact. So, if someone wants to start an SME business, they will also face their own impact. This matter will be explained in more detail by the next presenter, NURWAFA ALYA. That's all from me. Thank you.
Now, let's explore the core issue, which is the impact of financing challenges on SMEs in Malaysia. Despite being the backbone of the economy, SMEs often face significant barriers when trying to secure funding. Let's analyze how these challenges affect their performance, growth potential, and long-term sustainability. First and foremost, financial challenges can have a significant effect on SMEs' business performance. Due to their limited access to funding, SMEs may find it more difficult to continue their operations. This is because of their excessive loan-making activities, which will lower their performance, profitability, and efficiency. As a result, there is frequently result in operation inefficiencies such as product delivery delays or an inability to fulfill customer demand. In today's paced market, businesses with better access to financing can launch new products, explore new markets, and adopt innovative technology. Aside from that, SMEs' inadequate financial structure will make them vulnerable to failure. For instance, a lack of credit ratings and minimal capitalization. Therefore, they will be at a risk when the economic crisis strikes because they will struggle due to their lower capitalization. Now, let's discuss the next effects of financial challenges. SMEs have limitations when it comes to growth potential, making it difficult for them to increase production capacity or enter new markets. This is because of their inability to provide collateral for bank loans. As a result, they are unable to get any funding that would provide them enough to further grow their company. Furthermore, due to a lack of funding, SMEs are unable to invest in technology or infrastructure and they could not afford to develop their business. As a result, larger competitors will continue to grow better and seize every market opportunity. In addition, since SMEs are solely dependent on government programs, which are rarely carried out, it will be more difficult for them to expand their business. As a result, they will be less sustainable and unable to grow their company further. That's all from me. Then I would like to pass to our next presenter, NURWAFA SAFIAH.
Finally, financing challenges can directly impact sustainability. If SMEs are unable to secure financing, they may face long-term financial instability in high-cost or low-margin industry. A lack of funds can lead to bankruptcy. Moreover, business must remain adaptable to changing regulations, environmental concerns, and consumer preference. Investing in sustainable practices such as greener technologies or compliance with new law. Without financing, SMEs are unable to make this necessary adaptation, potentially facing penalties, loss of customer trust, and even a failure to meet sustainability goals. Let's now take a look at the various financial sources available to SME. Each option comes with its own set of benefits and limitations which can affect how business manage their financing challenges. First up, bank loan. These are traditional and straightforward to borrow money from a bank and pay it back over time. Next, venture capital. This is when investors give you money in exchange for a share of your business. Third, crowdfunding. You raise small amount of money from lots of people online. Next, you got grants. Some government offer non-repayable funds for certain projects. Then there's trade credit where supplier let you pay later for goods and services. It helps manage our cash flow. Lastly, invoice financing. You sell your unpaid invoice to get cash upfront, fast cash without taking on more debt. So, which option is best for you? It depends on your needs. Think about how much you need, how quickly, and what you're willing to give up. The right funding can help your business grow. The benefits of bank loans are one of the most common financing options. They provide large funding amounts that can support major investments such as buying equipment or expanding operations. They also offer structured repayment terms, making financial planning easier. However, bank loans also have limitations. Securing a bank loan is often difficult for SME due to strict qualification criteria. Businesses must have a strong credit history, collateral, and a proven track record of profitability. The approval process can be lengthy, and loans come with the risk of debt. If repayment obligations are met, businesses could lose assets. That's all from me. Next, I will pass to our next presenter, FAIZAL.
Government grant and subsidies provide SMEs business with valuable, non-refundable funding that can help them grow in the key areas such as innovation, technology adoption, and environmental sustainability. By receiving this grant, business can reduce our financial burdens associated with investing in new technologies, improving process of pursuing sustainable practice. This supports allow SMEs business to focus on strategic growth without worrying about repayment offering significant advantage in competitive market. However, accessing this grant can be highly competitive with a complex application process. Many SMEs business may find it difficult to meet eligibility criteria as some grants are sector specific, have a geographic restriction or provide limited funding. The application process often requires detailed documentation, planning and proof of alignment with the grant objective, which can be overwhelming for smaller business with limited resources. In conclusion, financing remains a major challenge for SMEs in Malaysia. Without sufficient access to adequate funding, business struggle to maintain daily operation, pursue growth, innovative and ensure long-term sustainability. However, by understanding and exploring the various financial sources such as bank loan, government grant, and alternative financial options, SMEs business can more effectively overcome these obstacles. Choosing the right financing option is essential for unlocking new growth opportunities, innovating and remaining competitive in today's fast-paced market. While the application process for government grants may be challenging, they offer significant advantage for business that qualify. Similarly, alternative funding options can provide flexibility and support for business in a various stage of growth. Thank you for watching. If you are an SME owner or planning to start a business, be sure to explore the available funding opportunities. Understanding your option and utilizing the right resources can help your business thrive and reach its full potential. Okay, stay tuned. Okay.